Good morning. It's March 20th. Welcome to the latest episode of Hyperwave. I saw someone's up at 4:30 a.m. Thank you. So I'm Leah Wald here with Tyler Jenks. And the big question today is, are we going to take out that death cross, Tyler? So we have good and bad news for Bitcoin prices. Tyler tweeted about it this morning. But Tyler is the most optimistic. So we'll see. And as for the title, we're going to do like a part 2 of Consensio. Definitely saw that a lot of you guys did the homework assignment. So hopefully Tyler's going to talk about right, wrong, and how you guys did. Thanks so much for taking the time. You guys are nailing it. And then I guess we'll talk about this another time, but we are making some hilarious t-shirts because we are really lame and love laughing and stuff. So hopefully next time we'll wear these utterly ridiculous cartoony characters of us playing around. So with that said, turning back to a real note, Tyler, Bitcoin prices.
Great. Thank you, Leah. And thank everybody for listening in. Important times, but nothing conclusive. I tweeted this morning, there's good news and there's bad news. And we'll go over that. We'll take a look at the price. And I'll give you my optimistic interpretation. And I say that because a number of other analysts are not very optimistic, even with the great bounce we had on Sunday night. And I think for very good reason they're not. It's still a very dangerous market. We're still in a downtrend. But we will take a look at that. First of all, what I'm going to do is I'm going to talk Consensio. We've had a wonderful response from people, which surprises me a little bit, because everybody in the world, even those that aren't technical analysts, know all about moving averages. But apparently we've struck a chord that there's something interesting here going on with Consensio. So what I'm going to do is I'm going to do a screen share, and I am going to pull up a chart. And this is the chart that we will talk about briefly, not about Bitcoin, which happens to be what we're looking at, but about those two wavy lines that are the moving averages we talked about before. Now, just to remind everybody what Consensio is all about as a trading system that only uses moving averages, I am going to bring up these pictures one more time. What we did is we just assumed three variables: the price, which is this blue line, and then a short-term and a longer-term moving average. And we went through a series of 13 different stages using what in math and in physics is called a sine wave. And a sine wave basically begins and ends at the same place. But when you apply it to the stock market or Bitcoin prices or a particular stock or the price of gold in a technical sense, what you get is a clear picture of how you move from a bull market, which is this subcondition A, to a bear market, and then back into a bull market, using only three variables: price, short-term moving average, and long-term moving average. And remember that I did not specify how short or long the moving averages are. So this is just a template, and we went through it by simply going from A to B to C to D. And you notice what's happening as I do that is this little red area is the definition of the changes taking place as we move from a bull market into a consolidation period in E, F, and G, and then into a full-fledged bear market. So we've moved from going up to going down. The trend was up. The trend is now down. You want to own it. You want to be out of it. And regardless of the time frame, this is the general way of thinking about an asset. And then we had beyond G, the beginning of the next bull market by going into H, I, J, K, L, and by the time you get to M, you've completely crossed over and you are back in ready for the next movement to take place. So just for those that have not seen that before, I just wanted to remind the new audience what Consensio is attempting to do. So a little further review, we're going to look at actual prices. And these happen to be the prices of Bitcoin right up through 85.49 right now. And notice I've got only two moving averages. So these are our three variables: price, short-term, and long-term moving average. Let's take it out a little further so that we can clearly see what everybody in the Bitcoin world has known since a year ago, starting in the summer, a bull market with the price above the short-term moving average, the short-term moving average moving up, and the long-term moving average and the long-term moving up, the short-term moving average above the long-term moving average, and all three are moving up. That's the definition of a bull market we just looked at by looking at A on this, the charts that we just looked at. Now, having said that, when you look at this area of the chart, we have the price below the short-term moving average. The short-term moving average is below the long-term moving average, and both the long-term, short-term, and the price is moving down. That's the definition of a bear market. So somewhere between that bull market and that bear market, we went through all the sub-conditions of Consensio. We went from A to B to C to D to E to F and to G to get into this downtrend. And all of that noise looks like this. It looks like price going down and cutting through the short-term moving average, the short-term moving average moving down. In this case, the price was held up by the long-term moving average. The price responded by going back above the short-term moving average, but the short-term moving average was still moving down. And by the time it flattened out, the price came back down through it. And then the short-term moving average crossed beneath the long-term moving average, and all of a sudden you're in a bear market with all three going down. Now, by definition, the long-term moving average does not turn down very quickly. In fact, it doesn't turn down till all the way over here, where the price is already coming back into the short-term moving average. So I don't want to be too complicated about this, but I do want you to get the mental picture of what we're trying to achieve with Consensio. And as I mentioned before, the best way to do that is just like this. Get rid of the price. Forget the price. All you need to concentrate on in Consensio are the moving averages. You can tell where the bull market is. They could not be going up, these two long and short-term moving averages, unless the price was doing something funky over here, going up. That's why these are going up. But you don't need to look at the price to know that. You can tell that price must be falling to get this reaction on the short-term moving average.
Tyler?
Yes.
You've mentioned before, sorry, there's a little reverb here. that you use 14-day moving average sometimes with Bitcoin, given that it trades 24/7.
Right. What we're looking at right now happens to be a 14-day and a 50-day moving average. Excuse me, 52-day moving average. And we're looking at a daily chart. But you can experiment with the time frames, and different assets, various time frames on these moving averages give you better results. Better meaning more consistent, picking up more important turning points more quickly. But I like to use a 14-day and a 52-day moving average or period moving average. And then I will, when we go to weekly, 200-week moving average is way too long. And we'll take a look at that when we look at the Hyperwave and Bitcoin later on. This isn't going to be very long today because what I wanted to do, I challenged the listeners from Consensio 1 in our vlog to try to figure out if it takes from A to M or 13 sub conditions when there are only two moving averages with the price, how many different combinations are there if we do this? And now I am going to put a 200-day moving average in. And there's your third moving average. So my question to you was, okay, if it takes 13 subconditions to completely explain going from a bull to a bear market with two variables plus the price, when you add this third one, how many are there? And we've had a number of people give us answers. And I've told each one of them individually, you're way, way off. And just to give a hint here, the guesses or the calculations people have made all fall between 25 and about 50 different combinations. So I'm going to give you one further hint, and then we'll go into a lot more detail in Consensio 3, 4, 5, and 6, which will come in future vlogs. But my hint to you is you're off by a factor of 10. In other words, those that are guessing 25, 30, 35, 40, you should be guessing at least 250 to 500. And then you will be getting closer. Now, that makes it sound like an unbelievably difficult problem, and therefore those that have tried to figure it out might have already decided to give up. I hope somebody doesn't give up. I'd like somebody to go through this process of figuring out, even without the price, just by looking at these three lines, how many combinations are there when you go from a bull market into a bear market and then back into a bull market. Now with Bitcoin, we're not yet in another bull market, clearly. But let's just talk about what we're looking at here, and then we're going to get off of Consensio, let you do some more thinking, and we're going to go to the price, and then we'll call it a day, because we're in the middle of a snowstorm where I am, and we could be getting a foot of snow here on the East Coast, and even a foot and a half or 2 feet further north. So this is Bitcoin. There's no price here. I'm going to throw the price on one more time. There's the price. So you know where all these lines are coming from. It's coming from the Bitcoin Hyperwave. I'm going to take it back off, because what we want to do is we want to begin concentrating only on these three lines. Now, a 200-day moving average, the price happened to be above it this entire period, and now we're getting something happening here, and I'm going to bring the price back one more time, because we dropped below the 200-day moving average when we took this furious move back up off of the Hyperwave phase 2 line, which everybody remembers comes in down here. And We have broken the 200-day moving average here recently, and now we are heading up. Now, because the 200-day moving average is still moving up, we can't be in a bear market. Even though the 52-day moving average is moving down, the short-term 14-day is moving down. The price is now moving up for the last 3 days, but you're not in a bear market until this line, the 200-day, turns down. I'm going to get rid of the price one more time so you can focus on what this is telling you about if this is gold or if this is the stock market or if it's Tesla stock or if it's General Motors. It does not matter. The price is what is causing these lines to move. And where you get crosses of a short-term moving average below an intermediate-term moving average, it gives you a signal. When the short-term moving average does not cross below the long-term moving average, that gives you a signal. When the short-term moving average crosses back above the declining intermediate-term moving average, that gives you a signal. And then when it crosses back below both of them, that is the first very bearish signal that you have gotten in this entire chart. Okay? So, again, put the price back on it. Try to recalculate how many combinations of these 3 lines plus the price there can be going from a bull market into a bear market. And now I'm going to get off the subject of Consensio for now and take a look at where we are with Bitcoin. And this is the phase 3 hyperwave trend line with today's action on, excuse me, this is the weekly action on this weekly chart showing not only did we penetrate 5 weeks ago, we penetrated the line, as everybody knows, this past Sunday, but we closed above it. And now we've got an open and the last trade of this week above the phase 3 trend line. So that's reason for optimism. Let's go to a lower time period, 4 hours. Yeah.
We also have a really crazy puppy here. So just making a note, right, to everybody that when Tyler, tell me if I'm wrong here, but Consensio is utilizing a lot of different systems, right? So when people talk about Tone's random number generator, technical analysis generally, Elliott waves, and all the different indicators that, oh boy, Thor, that you utilize. And, you know, we've talked about Fibonacci lines. We've talked about, you know, the MACD. We've talked about the RSI. Don't forget that, you know, the fun part is looking at all these different systems, looking at all these different ways that traders trade and investors think about things. And not going to knock on it, sometimes fundamentals as well are super important, right? Especially for traditional markets. And ensuring that you're creating your own trading system. So, you know, these are certain ways to trade. These are certain ways to think about it. Tyler's system actually utilizes over 40 different indicators and systems. So that's why it's brilliant and the best. But yeah, not to knock other systems at all. There's so much to learn from all of them. And I think that it's important to especially listen to the experts in all of them in order to make your own judgment calls, because that's where, you know, you're making your own trades and it's you putting your own money down. So I just wanted to make that small note. Tyler, before you go back to Bitcoin for the daily chart.
Yeah, well, that's more than a small point. It's the essential point to understand about what these various experts with individual trading systems are doing. What Tone does with the sequential system, what Hyjin Lee does with the Elliott wave and others, what I do with Hyperwave. What we're doing is we've spent a long time understanding those individual systems. what would be very nice is that if all technical analysts use every potential and possible system out there, and very few of them do, we get very comfortable with a system that we're using and it works well for us, and we keep doing it. I, from the beginning, 40 years ago, tried to learn every single system in as much depth as I could, and then I created a number of my own. We've shown you one already, Hyperwave. We're in the process of showing you a second one, which is called Consensio. And I'll just differ with Leah for a second. The Consensio trading system is in itself a complete trading system where you don't need any other system, including Hyperwave or sequential or Elliott wave. Once you get to know how Consensio works, you will be able to buy and sell, make trade decisions with that system itself, by itself. I never do that. As Leah says, I use 40, well, I actually counted it up the last time Leah said that. I use about 67 different trading systems or pattern recognition systems or momentum systems or oscillators in difficult situations where I'm trying to make a decision. I overlay them and I take the weight of the evidence. I always use things like Hyperwave as the underpinnings for an analysis. But Hyperwave only works for very, very few asset classes at any point. It happens to be working for Hyperwave right now. So I love to overlay short-term trading systems like sequential on top of it. I love to overlay Consensio on top of it at interesting turning points to help me make my decisions. So excellent point. I'm going back to screen share and we'll close this with our analysis of Bitcoin where we are right now. And we're looking at the chart on a 4-hour basis to note that on a 4-hour basis, we've already looked at the weekly, which is the way Hyperwave is definitive. Hyperwave is definitive only using a weekly chart. And we passed the test 5 weeks ago. We passed the test last Sunday. Now what I'm going to do is I'm going to go off of that chart and look at shorter time periods to get a better sense of where we are. This is a 12-hour chart. So on a 12-hour chart, we have broken through the Hyperwave phase 3 line, 1, 2, 3, bounced off of it 3 times, broke it again 4, 5, 6, slightly on 7, and then have bounced away from it. I don't care about that in terms of making it a decision, but it's interesting to see how on shorter time frames, how difficult this period since the bounce has been, because we've gone above, below, on, and now above again that Hyperwave trend line. That would be true with moving averages. So if I throw moving averages on here on a shorter term time frame, what is important is the last 2 12-hour periods have been above the short-term moving average, which in this case is 14 12-hour periods. So this moving average is a 14 12-hour period moving average, and we've got 2 bars now above that. That is a very good sign, because the longer these stay above that short-term moving average, it will turn that moving average back. Right now, we are in a bear market in that the short-term moving average is moving down, the price is moving down, the long-term moving average is moving down, and we just said in Consensio, that's the definition of a bear market. But look what's just happened. Price is now cut back up through the short-term moving average, and by definition, it's no longer a bear market. It's not a bull market, clearly. because we need to turn both of these moving averages up. And the only way we can do it is to get price above them. And notice where it's coming in, where our valley of death starts around 9,750 all the way up to 12,000. That's where all the action is going to be. So for now, we are still in a downtrend. We are no longer in an official bear market with the 4-hour or the 12-hour time period, but on the weekly, let's think about this in terms of Consensio by adding one other long-term moving average, and then we will close. So to do that, I am going to add a 200-day.
Tyler.
Yep.
Additionally, question from the live chat. Thank you guys. Since we're kind of in a crux time this week, the question is, if phase 3 price can test phase 2 line. Sorry, I'll go back to that one. Do you think we will get back and touch the support trend line that we bounced from again soon, or can we go up for a couple or more weeks now? Our last vlog, we said that, you know, we made it out. We said that on Sunday. So while you're discussing this price action, can you also touch on that point?
I will. Yes, I've been happy the last 2 days that we've been able to move up from that trend line, from the phase 3 trend line. But you can see we have not moved up much. We are now trading at 85.16, but remember the trend line keeps moving up. So last week, that trend line was at 8,096. This week, it has moved up to around almost 8,200. And the following week, it's going to be up around 8,350. So we're at 8,500. It's buying us a little bit of room. We need to get up, you know, very close to 9,000 or 9,500 before we can breathe this sigh of relief. And I believe we're going to do that. But I tweeted today in response to someone, I'm giving it better than a 50-50 chance that Bitcoin prices are going to go up through the death cross, which will negate that death cross, and they will be able to cut up through all of the overhead resistance all the way up to 12,500 in the next 2 or 3 weeks. But I'm only giving that slightly better than a 50-50 chance. But I am giving it that much. And that's basically because I believe in the resiliency of this phase 3 line. Okay, I will conclude by going over where we are on a Consensio basis. With Bitcoin on a weekly basis, this is the 200-week moving average, and we're not getting anywhere near it. It's all the way down at 2,000. This is the 52-week moving average. We came fairly close to it back on February the 6th. We didn't come anywhere close to it recently last Sunday. But the short-term 14-week moving average has turned down. The price is below the 14-week moving average. That moving average is coming in at 10,820. But you can see it's beginning to drop rapidly. We've got to get above that and turn that back around. And if we can do that, the short-term 14-week moving average will turn up when price stays above it long enough, about 7 weeks approximately, depending on how rapidly it moves up. So sometime in the next 2 months, if we can get above 10,800 approximately, we will be back in a bull market, even though we're still well below the highs. Well, how is that possible? Because we've just looked at the definition of a bull market using 3 moving averages. The price must be above the short term must be above the intermediate term, and the intermediate term must be above the long term. And if we are in that position, even if we are sitting just up in here around 12, 13,000, and the short term turns back up, we are back in a bull market. That's what we're going to need, in my opinion, to blow through the tops and get up into the $25,000, $30,000, $35,000 area. And when we do that, we will also establish once and for all that this phase 3 trend line is exactly that. We're only in a phase 3 in Hyperwave. Okay, that's enough for today. Thank you very much for listening. I am going to turn it back and
all right.
There we go.
Yeah, it's turned back. Thanks, Tyler. Thanks, everybody. Claude, I see your comment. You're correct that Tyler, are you there?
I am.
Look at a weekly basis. Actually, that's a really good question. Tyler, specifically, if phase 3 price can test phase 2 line on an intra-week basis.
Do that again, please.
Can phase 3 price test phase 2 line on an intra-week basis? Do we look at intra-week bases?
No, we don't. Everything in Hyperwave is closing prices on a weekly basis. You can get all kinds of weird things happening, such as the price could drop today all the way down below 4,000, which would cut through not only the phase 3 line, but the phase 2 line. And then if price goes back up above 4,000 and above 8,100, 8,200 approximately, it still holds the phase 3 line. Does not matter what happens during the week.
Right. So sorry, I'm getting a lot of kisses. With Bitcoin, right, we look at Sunday, 8 p.m., and then obviously market close, 4 p.m. for Friday.
Yeah, GBTC is 4 o'clock on Friday, all stocks, most indexes. Hedge funds, commodities trade at different hours. They don't close at 4 o'clock. Some close at 1:30, 2 o'clock, 2:30, 3:30. You've got to know what you're trading, when its hours are, and then you apply things like Hyperwave to the closes of the week for each one of those asset classes.
Awesome. Awesome. All right. Everybody else, just send in questions. Thanks so much. Did see the comment. Maybe I will wear a cowboy hat and serenade with the guitar. We'll figure that one out. Looks like Thor wants me to take him out. But yeah, thanks for listening in to today's episode, March 20th. If you like what we're up to, smash those likes, please. And until next time, Tyler.
Great. Thank you very much. We'll see you tomorrow. Bye-bye.
Have a great day, everybody.